Hey everyone, in today's video I'm going to do an in-depth walkthrough, a full comparison, and an easy illustration of the itemized and standard deduction. If you're new to the channel, hi, my name is Alex and I'm a certified public accountant. I make videos on tax planning and personal finance, so please subscribe for more helpful tips. To better understand these deductions, let's start with a high-level overview of the basic federal income tax equation. The equation goes like this: gross income minus adjustments equals adjusted gross income, or AGI. You then take adjusted gross income and subtract either the standard deduction or the total of your itemized deductions, whichever is higher. And this results in your taxable income. You then pay taxes as a percentage of this taxable income. Did you notice anything special about that income tax equation? You can subtract either the standard deduction or the sum of your itemized deductions, whichever is higher. Since deductions are direct subtractions from our income, higher deductions result in lower taxable income. And lower taxable income results in more money in your pocket and less money paid to Uncle Sam. So now that we understand where these deductions fit in, let's dive right into the standard deduction. According to recent IRS data, roughly 90% of taxpayers take the standard deduction, and only about 10% itemize their deductions. The standard deduction is the simplest of the two, because it's a set, fixed dollar amount based on factors such as your age, blindness, and filing status. Here's an example of standard deduction amounts by filing status for 2024. For example, if you are single, in other words unmarried with no dependents, the standard deduction is $14,600. That means you're allowed to subtract $14,600 from your income, which directly lowers your taxable income. Also, please note there's an additional standard deduction for taxpayers age 65 or older and or those who are blind. Also, please note that Congress typically adjusts these amounts every year based on inflation. Now, there are a few important caveats to the standard deduction. If a taxpayer is married filing separately and their spouse itemizes deductions, the taxpayer is not allowed to claim the standard deduction. In other words, when married filing separately individuals, both must file itemized or neither can. Additionally, with limited exceptions, most non-resident aliens are not eligible to claim the standard deduction. In summary, the standard deduction is a fantastic option because it's simple to use and almost everyone qualifies. It is one simple amount based on filing status, age, and blindness that you can use to directly reduce your taxable income. Simple and easy to use. Next up, let's cover itemized deductions. If you end up using itemized deductions, they're listed on Schedule A of Form 1040. There are 6 common categories of itemized deductions, but these should be evaluated collectively rather than individually. To decide whether itemizing is beneficial, add up all your itemized deductions and compare that total to the standard deduction. Think of them as a bundled package, not separate items. If the sum total of your itemized deductions is higher than your standard deduction, then you should itemize. That will result in lower taxable income and less taxes paid. Now let's go through all the common itemized deductions. First up, we have the home mortgage interest deduction. If you own your home and your home is considered a qualified residence, then any interest you pay on your mortgage counts as an itemized deduction. Please note that this mortgage interest is limited to loan amounts up to $750,000. Also, the loan funds must be used to buy, build, or substantially improve the home, and the home must secure the mortgage. Next up, we have state and local taxes, aka SALT. This is limited to $10,000 per year or only $5,000 per year if the taxpayer is married filing separately. This one can get a little complicated because it includes property taxes paid on your home plus either state and local income taxes or sales taxes, but not both. Some states don't charge state income taxes, so this gives taxpayers another option to deduct state and local taxes. Third on our list is medical and dental expenses. Medical and dental expenses are only deductible if they exceed 7.5% of your adjusted gross income. These medical and dental expenses must be out of pocket and you cannot count them if your insurance reimburses you later on. Qualified medical and dental expenses are deductible, but I suggest you keep very detailed receipts, records, and other documentation. Moving right along, we have charitable contributions. Charitable contributions are deductible if they're made to 501c3 organizations. These charitable contributions could include cash contributions or non-monetary donations, but please note there are limitations and record-keeping requirements for each deduction. Fifth on our list is casualty and theft losses. These are deductible if they come from a federally declared disaster. Also note that they're subject to thresholds. Last but not least, we have other or miscellaneous itemized deductions. These include items such as gambling losses, but only up to the amount of winnings, impairment-related work expenses for disabled persons, and unreimbursed employee expenses for certain groups, such as armed forces reservists or qualified performing artists. In summary, the ability to itemize deductions is a fantastic option for taxpayers who have higher amounts of these deductions listed above. If the sum total of your itemized deductions is higher than your standard deduction, then you should itemize on Schedule A of Form 1040. If you have a copy of last year's return and you would like to check, go to your 1040 and scroll down to line 12. If the amount in line 12 matches the standard deduction amounts listed in the blurb to the left, then you took the standard deduction. If there's a different amount in that box, then you itemized. So there we have it. That wraps up my video on standard versus itemized deductions. If my video is deserving, please itemize that like button and subscribe to my channel. Thanks for watching and take care.